This cycle, people are starting to get it. I think once we get through a pause that refreshes, a contraction in liquidity, the cycle, I think the next cycle, everybody's going to go all in and realize it's the kind of end of times, because we just don't know what's beyond that. Nobody does. And anybody who says they do is lying, because we have literally no idea. So this is the really big picture of what we look at. It allowed us to understand there's only two assets to own. And then we got to a further realization, which is, okay, if 97% of all of NASDAQ's price action is driven by debasement. It's the strongest factor we've ever had in any macro regime in history. Okay, great. That makes macro super easy. For crypto, it's 90%. So we've basically got a factor that's so powerful that nothing else matters. Brilliant.
Bitcoin and cryptocurrency are experiencing a huge surge in momentum, and investors worldwide are bracing for what may be the largest bull market in history. Raoul Pal claims that we are going to see a radical transition that will alter our entire understanding of the cryptocurrency industry as digital assets continue to rise to all-time highs. Raoul Pal thinks the next stage of this crypto cycle will be bigger than anything we've ever seen, as institutions continue to set up shop behind the scenes. The macro investor and former Goldman Sachs executive revealed his revised portfolio and gave his reasons for expecting trillions of dollars in capital to be put into cryptocurrency over the next 2 years. He is still quite optimistic on Bitcoin and Ethereum. According to Raoul Pal, the tipping moment for pension funds, sovereign wealth funds, and significant institutional investors to fully embrace this new digital economy will occur in 2025. According to him, the global decline of fiat currencies and irreversible technical advancement will propel the cryptocurrency sector to become a $10 trillion asset class. If you're intrigued by bold predictions and deep financial insights, make sure to like this video, subscribe to the channel, and turn on notifications for more engaging content. Thank you for your support and enjoy the video.
So it always goes up in line with debasement, and we've shown that over time too. So this is the really big picture of what we look at. It allowed us to understand there's only two assets to own. And then we got to a further realization, which is, okay, if 97% of all of NASDAQ's price action is driven by debasement. It's the strongest factor we've ever had in any macro regime in history. Okay, great. That makes macro super easy. For crypto, it's 90%. So we've basically got a factor that's so powerful that nothing else matters. Brilliant. So then let's take the NASDAQ. If we've got one economic force, we take the NASDAQ, we divide it by by Bitcoin, it's down 99.97%. So you kind of get one asset allocation only, which is crypto, which is bizarre. In the macro world, we now think you need concentrated portfolios as opposed to diverse portfolios. In fact, diversification just destroys returns now because you've got one clear macro factor. Working on the business cycle and the various components of all of this, how it comes together and where we are in timing of that. This cycle, people are starting to get it. I think once we get through a pause that refreshes, a contraction in liquidity, the cycle, I think the next cycle, everybody's going to go all in and realize it's the kind of end of times, because we just don't know what's beyond that. Nobody does. And anybody who says they do is lying. They keep shifting the game. The game was the balance sheet. We all knew the game. Then it moved from the balance sheet to the Fed net liquidity. So then everyone's working out the TGA versus the reverse repo. Yeah. And then they went, actually, it's total liquidity because we're going to stuff it into the banks. And now the next one is they're going to stuff it into stablecoins. All they're doing is fine. I mean, that's Scott Bessement's job, and Janet Yellen's job was the same. They're bond salesmen. They're just, they're masters of the universe bond salesmen, and their job is to find where to absorb this, and that is all part of the M2 growth. We kind of know directionally that M2 plus the net liquidity things explains 90% of all price action. Is one more powerful versus the other? Well, financial plumbing people can argue that all day. I don't think it kind of matters, because what we're trying to say is, if they do that, does number go up? Because we're investors as opposed to economists. What we have found is there's this nice phasing between financial conditions that lead everything, and a hack for everybody who can't calculate financial conditions. We use a regression between the dollar, bond yields, and major industrial commodities. But actually, a piece of work that we just did recently that quite surprised us, gold is real-time financial conditions. Everyone's like, what drives gold? Suddenly we're like, we've seen this chart. Julie and I were like, something, and gold actually leads everything because it's actually current financial conditions, which kind of makes sense, right? It's the most sensitive to financial conditions. Then you've got the move in liquidity and markets, and the ISM kind of comes behind that. So there's this nice way that you can look at things to give you an understanding. So we all know, in fact, everybody on Twitter now knows that Global M2 leads crypto by 3 fucking months. That chart will be the death of us, as we know.
You guys have created a cult.
And it'll fall apart at some point as well, and then we'll be the worst people in the world, even though we try and tell people. So we've got financial conditions, then we've got M2, then we've got markets, ISM. So there's a nice kind of understanding of where this goes, which allows you to forecast stuff because, again, there's one dominant factor, which is so easy. I remember before having to figure out all the variables of what was driving Brazilian rates, and nobody cares. It's like factor on, factor off. That's it.
According to Raoul Pal, cryptocurrency is expanding more quickly than any other investable asset in recorded history. He estimates that there will be over 1 billion active cryptocurrency wallets globally by the end of 2025. It is nearly hard to completely comprehend this rate of increase, and he thinks it will lead to the fastest wealth creation in history. Raoul claims that after studying financial markets throughout his entire career, all of his data points to the same conclusion. Markets are driven by liquidity, and cryptocurrency will perform better than any other asset class. He has been assuring investors that everything is coming together at this time for months. He claims that we are about to enter a time when the price of cryptocurrencies may increase at a parabolic rate, offering individuals who are early to the market potentially life-altering chances. To remain up to date on the most recent developments in Bitcoin, cryptocurrencies, and the digital economy, please take a moment to like this video, subscribe to the channel, and enable post notifications.
And so the question is, okay, well, we're in the 3rd year of a 4-year traditional cycle. And you're going to say, and so if we look at those orange bars, be it fall, 2013 was a great year. 2017, that was the year Bitcoin did a 23x off the January lows. And you're like, all right, well, 2021, what was that? And that's what Raoul and I call, Bitcoin's truncated cycle. And that's, again, where we are today in 2025, but not truncated. Why? Well, because what happened in March of 2021? Liquidity, this is the net liquidity flow, peaked in March 2021 and went down in a straight line as basically everyone tapered liquidity flow, right? Guess what else peaked in March 2021? The business cycle, right? Whereas when we're looking at today, right, so liquidity's growth, like looking at a 12-month flow, is basically just turned positive, right? Which is, you can say BOJ, ECB flow. And then the ISM is still, below 50. And then had we been sitting together, doing something like this back in March 2021, this is what we would have been looking at. So the ISM was at 63.8, and our forward-looking indicators were saying that the ISM was about to go down in pretty much a straight line. Well, this is where we were back then. Here's where we are today. I'm just going to do that one more time. Where we were back then and where we are today. So we're in a very different environment. This is basically suggesting that like Q2 of next year, the ISM gets to, let's call it the mid-50s. And so the point here is that because financial conditions have eased as much as they have, Felix, even with rates stable, dollars come down, which is the dominant factor in this index, at least, given the size of the move, it's actually extending. We believe it extends the business cycle outside of what a traditional 4-year cycle would be. And what we also know is that if this is right, and the ISM moves to, let's say, the mid-50s by, call it Q2 of next year, well, that once the ISM gets above 50, right, and then moves into its sort of late cycle peak, call it anywhere around 60, this tends to be where we get these really big moves in risk assets, and crypto included. It's also where we see alt season happen, right, which is really what people are saying win banana. And the win banana, we're up 600%. The banana zone is not a 1 month get rich thing, right? It's Bitcoin's up 600% since we set a low in Q4 of 2022. That's, been a steady banana zone, but the question then is, when is the next leg? Well, we'll get the next leg as the ISM progresses towards 55, because the thing to think about this is just like a credit spread, right? It's just like small cap versus large cap equities, which once you get into Bitcoin, which ETFs will be the large onboarding there, you got to think about that as like the way I think about that is like the gateway drug to crypto. So even if you're making, good money in Bitcoin, all of a sudden, if you're already orange pilled, right, and you're seeing something going up like Pepe or Bonk or Sui or Solana or whatever it is, you start to recycle those tokens very similar, like you'd be taking profit from a large cap growth equity at the bottom of the cycle and recycling it into small cap value and EM equities. Does that make sense?
Yeah,
and so
totally.
The economy's in a very different place, and the forward setup in terms of financial conditions looks good, but then also liquidity is rising. Okay, so here again, total liquidity, the 6-month flow is actually broken out of this kind of the range that we've been in. And that range that we've been in explains a lot of what has basically driven these knee-jerk reactions in crypto. The trend has been higher, but there's been, periods of time like the first half of last year or even, the first quarter of this year where basically we were just, kind of stuck in a range, which feels like that again now, but it's not the case, I don't believe. But so we still think here's as we call it, the most copied chart in the world when it comes to Bitcoin. But I still think that the point with this, and Raoul and I have said this repeatedly, even though, you've got people on Twitter who are monitoring this tick for tick, it's not about that. It's about the direction of travel and the fact that the trend rate is still growing. And when you then look at the year-on-year comps, it's just kind of another way of thinking about this or looking at this. And I think that this very much paints the forward setup. So yeah, when you compare, as I say, the 2021 cycle versus the situation that we're in now, and we've both said that liquidity and the business cycle are the two most important drivers of risk assets, and that also applies, to Bitcoin and the entire crypto universe, that these two elements are going to head higher over the next, let's say, 12 months, whatever. Into Q2 of next year.
According to Raoul Pal, there are only two primary assets that are currently worthwhile to buy when considering the world economy as a whole. According to him, currency debasement, or the gradual devaluation of money, accounts for nearly 97% of the NASDAQ's price swings. Around 90% of the price movement of cryptocurrency is influenced by the same factor. He adds why it makes more sense to have a concentrated portfolio that is focused on the strongest assets, rather than diversified across a wide range of assets in the macro environment of today. According to him, diversification actually reduces profits because there is only one obvious macro driver: liquidity. Raoul also discussed how the rules are constantly changing in the financial sectors. Everyone initially concentrated on the balance sheets of central banks, followed by net liquidity and the flow of funds between reverse repo facilities and the Treasury General Account. He claims that in order to maintain the financial system, liquidity is now being moved into stablecoins and banks. He thinks that the M2 money supply plus net liquidity, which accounts for roughly 90% of all price changes, is what actually drives markets. Raoul explains that while some people dispute over the specifics of financial plumbing, what counts is if these measures increase asset prices, which is what we as investors worry about. He went on to say that because gold responds immediately to changes in the economy, it serves as a real-time indicator of financial circumstances, while cryptocurrency values usually follow changes in global M2 with a 3-month lag. Overall, Raoul comes to the conclusion that, in contrast to earlier times when investors had to analyze countless complex variables, forecasting markets is considerably simpler when one understands this one major component: liquidity. Remember to like this video, subscribe to the channel, and enable notifications if you thought his viewpoint was helpful so you don't miss any updates. We'd love to know what you think about the future of cryptocurrency markets, so please share your ideas in the comments section. We appreciate your time and hope to see you in the next video.